As you can see in step 2 of my 2021 Topstep combine from May this year, I had like 100% of winning days. Now that's not to say I didn't have losing trades, but overall by the end of each day I was always up. And that is what happens if you know what you're doing with your entire risk model. Hey everyone, welcome back to the channel. My name is Diana and this is the Market Stalkers. Today we're going to talk about risk model and risk management. This video is for anyone who's grappling with intraday trading and struggling, trading futures, forex, cryptos, equities, basically any man-made financial instrument. In the intro, you saw me showing you the results of my step 2 Topstep trader assessment from this year, but through this video we'll have a look at my step 1 as well, where I traded a little bit more aggressively. So make sure you watch until the end of the video when I'll be talking about my numbers, accuracy, and all that good stuff in both steps of their combine. Let's get into it. Now, if you've been following me on here for a while, you know that I trade through order flow strategies. Now, there is some free stuff out there if you start digging through the net in the right places. But when I was a novice trader, when I first came across order flow, it was all very confusing. And every time I do an order flow specific YouTube video, I get, some beginners who stumble across my channel somehow, and they're generally also very confused and maybe even intimidated by the order flow terminology. And I totally get that. But it's actually not that complicated. It's quite logical once someone explains it to you in the right way. I mean, I was super confused back in 2013 when I first learned about it. And to this day, I still only see resources that are, almost geared from experts talking to other experts, rather than actually going back to the beginning and assuming that the viewer knows nothing about this way of trading. That's how my courses began. Once I learned how to use order flow methods, I took what worked for me, combined it with some other stuff that was also working for me, and I discarded the rest. So I'm by no means a puristic profile trader, okay? Now the reason why we discarded some of the stuff that they talk about is because many years later we actually tested some of the order flow ideas and discovered that I was actually right. Statistically, many of the original order flow ideas no longer work in today's markets for a lot of the reasons. So I decided to use my former music teacher skills, because when I was young, I used to teach music. Teacher Dean. So if you're new to order flow, I'm inviting you to my free 2-hour webinar on order flow trading 101. You'll find the link to the workshop down below, so come along, bring your questions. All right, so why did I do a brand new Topstep challenge in 2021? First of all, curiosity. To see how much they've actually changed since I traded for them, and also to see what their new platform is like, because I have many gold member trader students who are in the evaluation right now, and they keep asking me, hey, what do you think about the new Topstep platform? And I was like, so I wanted to re-educate myself, really. Second of all, I haven't done these challenges in many years, so I wanted to see how I would behave nowadays, having traded some larger accounts, and whether I could still do okay in a tightly managed trader assessment challenge. Now, when I trade my own money, I found that sometimes I slip a bit and I lack accountability. I'm still up on most of the days and most of the months of the year, but occasionally I find that, if I had some kind of a loss limit to follow, I would have done better. Plus, it's always good to test your skills like this every so often, right? And I love a good challenge. At this point, they're quite fun. But before we get into it, the important stuff. Subscribe to the channel and click the notification bell, especially if you want me to create more of this kind of content. I'm also going to remind you that every Thursday, I do a live Thursday streaming session where I show you how I do my market prep for that particular session of the day. And then if you're an Ultimate member, you can also participate in the live Q&A session, which is typically around 2 p.m. New York time, 7 p.m. London time. For more information about that, click on the join button and watch the free video that explains how it all works. Okay, on to the risk management and risk models. When people say to me, my risk management is excellent, I always like to challenge them on that, to find out exactly what their idea of risk management means. And pretty soon, during my qualification calls that I do before I decide whether I'm going to take on a trader, what usually comes up is that their idea of risk management is quite basic. It never involves like the entire risk model, but rather how much they're risking per trade or just what their risk reward is. So let me start by explaining that risk management involves many parts. And yes, how much money you're risking per trade, that's important. The second one is how many trades are you actually doing in a day as an intraday trader. Number 3 is how much is your average profit factor at the moment. You get that by taking all of your wins and all of your losses and then dividing those two numbers. Number 4 is the size of your stop loss that you're using appropriate for the market and the duration of your trades? Number 5 is what is the risk reward ratio on your winning trades and how often does that final target get reached? Finally, number 6 is are you consistent with all of these parameters or are you kind of varying them with each trade? Because that, until you reach consistency, is quite possibly the worst thing you can actually do for your profitability or lack of. So all of these 6 components make up your risk management model. Now, when you're doing any sort of a prop trading challenge, you have to go a step further. And then you have to figure out, you go backwards and start figuring out what would be the safe amount to lose per day. And no, that's not the daily loss limit that they give you. It should be way less than that, way less. Otherwise, you'll last like 1 or 2 days before you have to do a reset. Another thing is that all 6 components of risk management model that I've suggested here are connected and they work in sort of like a symbiosis to create a good strategy design. Just from like pure numbers point of view, if it has any part that is not in sync with the other 5 components, you will keep struggling. But then when you increase that understanding of what makes a good risk management model, suddenly things will start to turn around. And someday, I mean, it's not going to happen entirely overnight, obviously, that's unrealistic. And this is a research-like activity that requires you to have a decent number of trades that you've done so that you can have enough data to stare at and analyze. But once you put these puzzle pieces together, your trading curve will begin to turn from a frown into a smirk. Some of the things to be very careful with is a profit factor less than 1, because that means that most of your trades don't really have an edge and you have a negative risk reward. In that case, you have to take a look at your actual entries, the stop loss sizes, targets, trade locations, a whole bunch of other things that we can work on. Second of all, if the number of trades per day that you're doing is higher than your desired target on your trades, that is also usually a bit of a problem. Because let's say your default maximum target on a trade is 2-to-1 risk reward ratio, meaning if you're risking $100, you're expected to win $200. So if you're then doing 3, 4, 5, 6, 10, 20 trades, whew, let's go crazy, all in one day, you can never easily get yourself out of a bad trading day because you need way too many trades to reach the 2R and put you back on track. But if you have the target of 2R multiples and you have one bad day where you stop at 2 lost trades, then all you need is for the next day to have 1 trade that goes to your full target of 2R and you're back at scratch. But that's only if the risk that you're using has stayed consistent and you didn't lose more than 2R the previous day. Now let's go to my 2021 Topstep Combine. Let's try with step 2 because I think step 2 is a little bit more difficult because of the weekly loss limit and all of that. As you can see in step 2 from May this year, I had 100% winning days. You can see that there. That's not to say that I didn't have losing trades, okay? That's an entirely different thing. But towards the end of each day, I was always up. If you know what you're doing with your entire risk model, you can have many weeks like this, right? But this is not that realistic, okay? So, I traded extremely well here. I was following all the risk parameter rules. Usually you're not going to have 100% winning days for extended periods of time, right? But hey, I did it. It happened. No one cares. So let's have a look at my stats because I think that's a little bit more important. I was averaging $330 per trade. So nothing crazy. The experiment that I was doing here is that I was mainly trading with just 1 contract size throughout almost the entirety of the challenge. 1 contract. I think only towards the end of the challenge, I had a couple of days when I did do 2 contracts, but that was when I was heavily in a profit buffer and it was safer to do that. And if you count, my profits in both steps of the assessment, that's almost $20,000 trading. So, whoever's doubting whether D can still trade and whether I can still pass a trading challenge, this should answer all of your questions. So this is what my numbers look like now, today, 2021, okay? And let's analyze my stats even further. I had 65% of winning trades and a lowish profit factor. So I had a risk-reward ratio of 1.37, and I was trading very conservatively. And now in step 1 of the combine, I actually forgot that I passed step 1. So between that one and this one, there was like a month of a break where I just totally forgot I was doing it. So you will see that I actually traded quite a bit more aggressively with larger position sizes, and I'm nowhere near as consistent, and the curve is not very smooth, and it actually took me longer to complete. So here I only have 73% of the winning days because I was messing around with position sizes. I was like trading 1 and then 2 and then I tried trading 3, then I had a losing day and then I tried to grab myself back out. So changing your position sizes in these challenges is not a very good idea. Surviving an increase of contract size, it needs to be done only when you have one mofo of a profit buffer, okay? So let's see what that does to my stats. The average winning trade amount is bigger, 458. My average losing trade is still around the same because I never bury that. Now my accuracy is lower here. It's 47%, which is a lot more in line with how I normally trade. But my profit factor is much higher. It's 1.86. So lower accuracy, but higher risk reward, still very profitable, but with some mistakes. On step 2, higher accuracy, but lower risk reward, also extremely profitable. However, you have to strike that balance between those two numbers. So there it is. That was me doing a Topstep challenge in 2021. If you found this video useful in any way, don't forget to subscribe and also come join me for that free 2-hour order flow trading class on Tuesday, 27th of July 2021 at 2 p.m. Eastern, which is 11 a.m. Pacific and 7 p.m. British Summer Time. I hope to see you there, and also feel free to check out the rest of the useful links that are located down in the description box. That's it for me, and I'll see you next time.